Hello and welcome. My name is Joy Poe. This is my project for Entrepreneurial Growth, ENT 630, about business-related tax documents and instruction booklets. You will begin your tax journey at irs.gov. For forms and instruction booklets, go to File, Business and Self-Employed, then Small Business and Self-Employed Tax Center. Here you will find a variety of useful information for your small business, such as forms and publications, filing and paying your business taxes, employer EIN numbers, stages of owning a business, online learning workshops, webinars for small business, and more. I highly recommend this page inside the irs.gov website. U.S. corporate income tax returns and U.S. partnership tax returns. Here we'll be talking about Form 1120, and later on we'll talk about Form 1065 for U.S. partnerships. There are 4 types of Form 1120 for corporations. The first would be the straight up Form 1120, and it is for C corporations. The second is Form 1120S for S corporations. Unlike a C Corp, S Corps only have to file taxes yearly and they are not subject to double taxation. Form 1120-C is for cooperatives, and Form 1120-H is for condominium and housing associations. And then here I added Form 1065 for the U.S. return of partnerships. Completing Forms 1120 is considered a difficult feat. Most people will need to hire a tax professional to ensure accurate filing of their corporate taxes. It's wise to gather the pertinent information prior to meeting your tax professional. Your tax professional will need things such as your basic information about your corporation, including the name, address, EIN number, date of incorporation, and the total assets. They'll also need your income information, including gross receipts, cost of goods sold, dividends, interest, rents, royalties, and capital gains. They will need your tax-deductible expenses. Although documentation is not required to claim the deduction, you must have complete documentation on expenditures in case of an audit. Taxes paid, refundable credits, and payments made, which include the corporation's taxable incomes and schedules. The schedules would vary depending on your business, and documentation will be needed in the event of an audit. Corporate taxes are due to be filed the 15th day of the 3rd month following the date its tax year ended. You can find your IRS tax dates for businesses and self-employed at the irs.gov. If you're filing as a limited liability corporation, the U.S. Small Business Administration can be a very helpful place regarding the intricacies of small business, including the LLC. The article, 6 Things You Need to Know About Your Tax Responsibilities as an LLC, is a great starting point and has several useful resources there as well. As an LLC, the business will not necessarily file Form 1120. LLCs have a few options for filing, which brings to light the importance of choosing the correct business structure for your company. An LLC with multiple members may decide if they want to be treated as a corporation, partnership, or as part of the owner's tax return by filing out Form 8832, which allows the LLC to elect their business classification for tax purposes. If a single member LLC chooses to file their business taxes on their own tax return, this is called a disregarded entity. The IRS will consider a single owner LLC as a disregarded entity unless the owner fills out Form 8832 and chooses to be taxed as a corporation. If an LLC has at least 2 members, the IRS will classify the business as a partnership unless the owner fills out a Form 8832 and chooses to be taxed as a corporation, partnership, or disregarded entity. For further information on the intricacies of the LLC, refer to the IRS publication 3402. Partnerships. They file Form 1065, the U.S. return of partnership income. Form 1065 is an information return used to report the income, gains, losses, and deductions, credits, and other information from the operation of a partnership. A partnership doesn't pay tax on its income, but it passes through any profits or losses to its partners. Partners must include partnership items on their tax or information returns. An unincorporated organization with 2 or more members is generally classified as a partnership for federal tax purposes if its members carry on a trade, business, financial operation, or venture and divide its profits. However, a joint undertaking merely to share expenses is not a partnership. For example, a co-ownership of property maintained and rented or leased is not a partnership unless the co-owners provide services to those tenants. Generally, if you and your spouse jointly own and operate an unincorporated business and share the profits and losses, you are partners in a partnership, and you must file Form 1065. Form 1065 is due to be filed by the 15th day of the 3rd month following the date its tax year ended. Form 1065 is a complicated procedure and may require the help of a tax professional. Be sure to gather the required materials and information before your meeting. These items will be the same as were cited for Form 1120. I've got some great resources here. I hope you'll take a time to look at some of these things. All of them are linked. I will send my keynote presentation as a packet as well. The IRS website is filled with useful FAQs, small business tutorials, and other aspects of growing a small business. The website, thebalance.com, offers an overview of corporate taxes and has some valuable links to help answer some questions. The IRS publication 521 for corporations is great to cover if you are a corporation. Same for the IRS publication 3402 for taxation of the LLCs. And then there's also IRS Form 1065 for partnerships. It offers useful FAQs and links to forms. And then next up is the actual publication for partnerships. And then further down in Investopedia, the article defines and breaks down the tax aspects of being a partnership and how each partner will pay tax. And then finally, the U.S. Small Business Association has a learning center and a wide variety of information and help available to small business owners. Next up, we'll go to North Carolina sales and use tax and state income tax returns. You begin your tax journey for the state at www.ncdor.gov. Please excuse me, that is not .com, it is .gov. You go to businesses, sales and use, and then overview of sales and use taxes. Here you will find a variety of useful information for your small business, such as all of the taxable sales and use items in the state of North Carolina. The sales and use tax covers personal property that may be seen, weighed, measured, felt, or touched, or is in any manner perceptible to the senses and sold at retail. In those instances where the appropriate sales tax has not been paid on taxable tangible personal property, a use tax applies to the tangible personal property purchased or received from within or without this state for the storage, use, or consumption in the state of North Carolina. North Carolina sales and use tax. If the taxpayer's monthly tax liability is $100 or less, the taxpayer is required to file the sales and use tax quarterly. The returns with remittance of tax are due on or before the last day of January, April, July, and October for the preceding 3-month period. If the taxpayer's monthly tax liability is consistently less than $20,000 per month and at least $100 per month, then the taxpayer must file monthly on or before the 20th day of each month for all of the taxes due for the preceding calendar month. The taxes due must be remitted with the monthly return. A taxpayer who is consistently liable for at least $20,000 a month in state and local sales use taxes must make a monthly prepayment of the next month's liability when filing the monthly return due on or before the 20th day of each month. You must register for a sales and use tax account through the North Carolina Department of Revenue by completing the NCBR or visiting the online business registration portal. The sales and use tax form to file is Form E-500. It can be filed online, by mail, or over the phone. Refer to the Sales and Use Tax Rates and Other Information webpage for information about the sales and use tax rates. At present, the sales and use tax for Buncombe County is 2.25%. And then finally, we have the North Carolina income tax return. all domestic corporations, those chartered in North Carolina, and all foreign corporations which are doing business in North Carolina, and every inactive corporation chartered or domestic here must file an annual franchise and income tax return. Limited liability companies are subject to state taxation according to their classification for federal income tax purposes. Therefore, if a limited liability company is classified as a partnership for federal income tax purposes, the company and its members are subject to tax to the same extent as a partnership, and its partners is required to file a North Carolina partnership return. A North Carolina partnership return, Form D-403, must be filed by every partnership doing business in North Carolina if a federal partnership return was required to be filed. Also, if you are a sole proprietor, you will file an individual state income tax return appropriate to your situation. The golden rule of taxes, the takeaway is make sure you pay them. Otherwise, you can get in a lot of trouble. Then finally, we have our references, and we'll let that sit a few minutes. And thank you very much. I hope you guys learned enough about corporate income tax return Form 1120 and 1065, and the North Carolina sales and use tax and the state income tax returns needed to be in business. Thank you.